Hello, good morning, good afternoon, welcome. I'm very pleased to be joined by Urbano Troncoso, sorry, who is the Vice President for Structured Finance and leads a lot of their work on hydrogen at Bank Santander. Santander, for those of you who don't know, I think is the second biggest financial institution in Europe, but a world leader in financing renewables and also with a huge business in LNG finance as well. So a highly relevant player in financing renewables and gas, and therefore obviously going to be a big player in hydrogen. And Urbano is going to be speaking at the forthcoming World Electrolysis Congress, which is fast approaching its the 4th to 7th of March in Düsseldorf, Germany. So welcome, Urbano. Thank you for joining me.
Thank you very much, Nadim. It's a real pleasure to be invited to participate in this really interesting event, and also to be able to share a panel with the other panelists, and to discuss such an interesting topic.
Yeah, it's excellent. Equally, I'm very interested to meet yourself. One of the first bankers I've ever met who's a chemical engineer and actually has come through a lot of engineering roles. I think at Cepsa, who are also looking to do a lot in hydrogen. With their, I think their CEO Martin Wetzeler, who I've also interviewed before, but also followed that from working from a major utility and being a chemical engineer. You've also been consulting at BCG and now leading your bank's operations. So an unusual pathway, to say the least, for a banker to actually have a chemical engineering background, which obviously is a great benefit when you start having to look at risk and evaluating the bank's positions in supporting the clean hydrogen industry. So I guess that's the kind of opening area to delve into. Is we've seen a lot of policy come out. We've seen it shoring up, certainly on the production side. We're beginning to see maybe some individual actions around the demand side, but it's an incredibly complex area in terms of supporting the growth of a clean hydrogen industry. Certainly a lot more order of complexity than supporting, say, the solar industry, which was relatively easy, given electrons had a ready market. So maybe if you could just unpick your big picture view of where we are and how you assess the risk and where are you actually looking at deploying capital and what is the current status of your view of the landscape for clean hydrogen in the various markets that you serve.
Sure. Well, that's quite a broad question. I
Yeah.
think that let's start. I think that you mentioned it at the beginning, and I think that is quite important for people to start understanding that things are changing, and part of this change is what you mentioned. So profiles like myself are starting to join the financial institutions. So what I mean is that I'm chemical engineer. I spent 8 years working in an oil and gas company, as you mentioned, and then 3 years doing management consulting, and then I joined the bank, right? And this is probably quite a surprise for many people, but I think that this is part of what is required to develop this industry. So it means that, okay, we need to start collaborating, and this collaboration is not only in order to develop projects, but is also to be able to finance those projects, right? So we need to bring the right technical and commercial capabilities to the bank in order to be able to assess the risks and to help our clients to move forward their projects. So I think that this is the first point. Then in terms of regulation that you mentioned as a second point, I think that we have seen a clear evolution in the regulatory support structures that governments are trying to push forward over the last, I would say, 12, 18 months. So if you look at how this industry started, most of the projects so far have been funded with equity and subsidies. And these subsidies were first pretty much focused on the production, and second, those were mainly grants, meaning that, okay, those were capex support mechanisms, right? We are seeing how this is evolving towards more revenue support streams, right? And revenue support mechanisms that would allow the developers and the sponsors of those projects to have better visibility on which are the future cash flows of those projects. And this definitely is helping us, as financiers, to also come into the picture and potentially to deploy non-recourse financing on other types of financings to these projects, which I think that is great news, because definitely if we want to scale up this industry, that is probably the stage at which we are right now, we cannot continue relying only on equity and subsidies. We need to start bringing other sources of capital to the picture, right?
Yeah.
So there we have seen how we evolved from things like the innovation fund, in Europe, that was pretty much focused on this capex, to things like the European Hydrogen Bank. Definitely, I think that on the other side of the Atlantic, you see the IRA. We are seeing Head Start program in Australia. Canadian companies also hoping that the government is going to unleash these tax credits. So I think that the whole industry is changing in this sense, and I think that this is going to facilitate a lot our role as financiers and the deployment of new sources of capital. And then maybe covering this third topic that you mentioned. So how are we looking at projects? I think that well, first of all, not it's not so easy to deploy non-recourse financing for a hydrogen projects, but I think that the best news or the good news is that definitely there is appetite, and most of the players are willing to collaborate and to in order to facilitate these first financings. So I think that okay, the willingness is there.
Mhm.
Now we also have to understand that when we want to deploy non-recourse financing, there are some constraints, right? And those constraints are probably the ones that are slowing our capacity nowadays to participate in some of the first projects that are trying to move forward. And they can be divided into several buckets. I would say the first one is that, okay, if we look at the technology, I think that we all agree that electrolyzers and electrolysis is something that we have been using for many years. However, of course, not at the scale that we are aiming to do now. And secondly, it's not only a matter of a scale, it's in some cases the way we are planning to operate those plants, right? So we are looking at off-grid configurations, et cetera, et cetera. So I think that, okay, how do we come all together with a solution that involves not only the OEMs, but also the EPC companies and the financiers, and we all come together in a way that we can minimize or mitigate the risks associated with the integration of those complex systems and their operation is quite critical. So I would
Mhm.
say that this is the first one. Second one is we are discussing, or we are trying to develop a market that today does not exist or doesn't exist as such. What I mean is that, okay, if we discuss about hydrogen, of course 94 million tons of hydrogen are consumed around the world nowadays. However, the reality is that a really small fraction of those are green hydrogen or are blue hydrogen. If we discuss about derivatives, similar story. So we have a significant amount of ammonia that is traded globally. However, limited amount of it is blue or green. So basically, the problem there is that we do not have a way of forecasting which is going to be the actual demand for these low carbon products, and secondly, which is going to be the price, that at which they are going to be sold. So it means that from a financing perspective, especially non-recourse financing perspective, the key element here is having visibility on these future cash flows, and this visibility of future cash flows is pretty complex if we don't know how much the volumes of the prices
Yeah.
that are going to be traded, right? So there, I think that being able to come together with the off-takers in order to maximize this visibility and to put in place mechanisms that would enhance this visibility will be quite critical. And I think that here is where governments also have a role to play, right?
Mhm. Yeah.
So and this comes back to the point I was touching on before, so I think that these support mechanisms much more focus on revenue streams and potentially also providing support not only to the production but also to the consumption is something that is going to help a lot,
Yeah.
to unlock the potential of this industry, right?
Yeah. Yeah.
So
But
I would say this is
yeah.
quite big. Yeah.
So it's yeah, from reading you right in terms of some of the initial work around the lower scale projects was grants and finance to help support capex. But as we start to scale, it's that premium that has to be covered, which is obviously is occurring around the OpEx, and therefore you need to have that price transparency and an off-taker who's willing to off-take a certain amount, and obviously that off-taker needs to have a reason to pay that premium. And I mean, are you seeing some off-takers able, willing with the checkbook to pay a decent green premium, and you can see a way where there can be some subsidy, because surely the sheer volumes of capital required to shore up OpEx or a green premium over the lifetime of a project are huge, and beyond the realms of sort of public finance or subsidies.
Yes, I think that that's a great point. And the reality is that hydrogen can be used in many applications, but not all these applications probably are going to move forward at the same pace, right? And I think that that's important to keep in mind. And the second point is that for a long time we have been discussing this green premium and how this premium is going to disappear over time. It I'm convinced that it will disappear over time, but the reality is that today we have to face the green premium. And instead of hiding it, I think that some of sponsors have understood that they need to present or make it visible to the right consumers, final consumers. And we are seeing this type of approaches in things, for example, like steel. So where some companies have understood that it's not about diluting the green premium among the whole production, but it's more about going to the final end consumer that is willing to pay this premium for any specific product,
Yeah.
and make it visible to them through a labeling. We are also seeing this in some of the beverage industry. So you are seeing this in whiskey distilleries, some of other companies, and I think that this is probably what is gonna make the first projects viable.
Yeah.
Okay.
Yeah.
Additionally, on top of that, you have the regulatory pressure, right? And I think that this is not homogeneous across the world, right? So you have some regions like Europe where definitely you see some companies and some segments being exposed to much more or much higher regulatory pressure to decarbonize. And this is all.
Are you referring to CBAM there having an impact?
For example, I think that CBAN is going to have an impact. Red 3 is going to have an impact, because basically at the end of the day, what you have is current consumers of hydrogen are going to need to decarbonize over the next 6 years, right? And they do not have any alternative to that. So it means that, okay, this is definitely boosting their demand on hydrogen. So I think that these use cases where either there is a regulatory pressure or you have final consumers that are willing to pay the premium are going to be the first ones moving forward, and we are already seeing them taking the first steps.
Excellent. Just circling back, you mentioned about electrolysis technology and how it needs to, obviously be work and not have any technology risk, certainly in terms of the configurations, the scale. Also, obviously speaking at the World Electrolysis Congress, we have a variety of electrolysis platforms. I assume the new electrolysis systems are just not, have got too much technical risk to have large scale projects. So do you see there an order of merit between the various electrolysis platforms, and at what scale they can be deployed currently, and that they'll have to build up steadily and prove themselves?
Well, I think that definitely it's good news that we are seeing more and more companies coming into the picture, and that the manufacturing capacity is scaling up quickly. So this is really good news for an industry that wants to achieve the targets that have been defined, right? However, what is true is that, and that's the reason I mentioned it, if you want to access non-recourse financing, definitely there are going to be some constraints. And one of these constraints is that you probably need to have a technology that up to a certain point has been tested and proven, right? So I think that this is something that would require that newcomers will need to bit a bit prove their technology and start probably in smaller projects and potentially start growing from there, in order to make everyone comfortable with the role they can play in really large projects. I think that we are already seeing really large projects progressing. So I do not expect that we are only going to see smaller scale initiatives reaching FID in the next 6 to 12 months. I think that some large initiatives will also get there. However, it's also true, that what you are saying, the risks associated with large initiatives require the implementation of mitigants, or proper mitigation plan, that it's probably more complex to implement and to define than when you have smaller scale projects.
Yeah. How did you define just large scale? So within the next 12 months, would we see some more 100 megawatt, 200 megawatt projects as opposed to 20 megawatts and 30 megawatts? Is that large scale?
Yes, I think that large scale is nowadays anything that is beyond couple of 100 megawatts. I think
Okay.
that for anyone is large scale. Let's do not forget that the largest electrolysis plant nowadays in Europe is still 20 megawatts, right?
Yeah,
So
exactly.
I
Yeah.
think that we have to keep.
Yeah.
Sometimes we discuss a lot about gigawatt scale, what I think
Yeah,
that
yeah.
is great, but the reality is that today we are still one step before that. Yeah.
Yeah, yeah. I mean, the temptation with new industries is always to run before, to sprint, do an Olympic 100-meter sprint before you're actually, when you're actually a toddler. So you've got to learn to walk first, and then think about running, and then finally get up to sort of Olympic Olympic pace takes well, whatever it does for an adult, about 18 years of training, I guess. But it's been fascinating to talk to you, Urbano.
So,
As I said, you're going to be at a World Electrolysis Congress. We're very excited to have you there, and we love the support that Santander is giving the industry, and we look forward to Santander helping to support the birth of this industry. And it's exciting to see people like you with a chemical engineering background involved and understanding, the technicalities of non-recourse finance, because it's I guess a sign of people risk being taken out of the industry, and decisions, more accurate decisions, being able to be placed on taking investment risk out of the development of the industry. So certainly a good sign, and we look forward to your contribution in Düsseldorf.
hi, well, thank you very much, Nadim. Real
Yeah.
pleasure, and well, really looking forward to the Congress.
See you. Many thanks. Take care. Bye bye.